What is up, investors? Back again, another stock analysis video. This time by request, we're taking a look at Adobe Incorporated, ticker symbol ADBE. Now, in today's video, I'll go through a little bit of news that this company has been making in terms of analysts upgrading the stock, and we also had an insider selling some shares. So we'll talk about that. Then we'll go through the most recent financials. They just posted these not too long ago. Very interesting, and also gives you great insight into the stock. First, let's just take a look at the last year. The stock is up a good 46, almost 47%. As we see here, the stock is approaching, or is actually at, a 52-week high at about $439 per share. The 52-week low made back, kind of in the COVID-19 breakout area, $255 per share. So that's quite a range. That gives this company a market cap of $206 billion and a forward PE of 43, which we'll see if that's, a stretched valuation or not. But as you can see here, man, this stock has been ripping. And again, we're approaching this 52-week high. If you've been following this channel any degree, you know that me wanting to jump in when stocks are at this 52-week high, I am extraordinarily hesitant to do that. Because why? Look, back in February of last year, we were at a 52-week high of about, or an all-time high probably for Adobe, at $383 per share. And then what happened? Couple, not too much longer later, we crashed down to about this 255 mark. So that would have been quite a haircut if you had bought up in this range. So again, not saying that history is going to repeat here or this stock's going to come crashing down, but we do have some headwinds in the market with an election year, with COVID-19 still being around and maybe seemingly getting a little bit worse than it was before the shutdowns and all that stuff happened. I don't know what's going to happen. I can't predict the future. I just know buying stocks near their 52-week high, not always the best idea. Now, Adobe has gotten several upgrades, though, over the last few weeks. JP Morgan went from 325 to 430. That's already been breached. Cowen said it went from 365 to 400. That's already been hit. And then finally, Jefferies went from 370 up to 450. So that's about to get hit as well. So these analysts love what they're seeing. And when we dip into these numbers, boy, I think you're going to love what you're going to see as well. Not to spoil what we're going to have. But hey, it's not all great news. General Counsel and Secretary Dana Rao sold 2,000 shares. That's quite a bit of money, actually, at $411 per share. This person now holds about 17,000 shares. So they sold about, what's that? Maybe about 10% of their stake. But whenever you see insider selling, it can be a negative, but it also could be, this is how this person is paid. And maybe this person wants to buy a house or a yacht or a boat or go on vacation. Maybe they have kids that are going to college. I really don't know. And in a lot of ways, I don't really care, because really the numbers are going to drive the stocks, not necessarily insider selling, but it's just something you want to keep a look at. Somebody that actually works and is very close to the company is selling a 10% stake. Although if I had 20,000 shares worth $430 a piece, maybe I'd lighten the load a little bit and go on vacation as well. So here we go. Jumping into the numbers, the most important part of this video is the numbers. And so we've got a 6-month view here. I love it when companies do this. They give you a 6-month view and then they give you the 3-month view. So you can kind of get a wider view and a little bit tighter view. Now, if you're not familiar with Adobe, they have the subscription revenue, almost all coming from Adobe Creative Cloud. Full disclosure, I am a proud member and buyer and subscriber to the Adobe Creative Cloud, although I don't own shares of the company. Product revenue, very minor we see here. These are in millions. It used to be flipped. It used to be almost all their sales came from selling product and software, and then they switched to the subscription model, and this stock has gone up like a rocket ship since they've switched to a subscription model. They've got a little bit of service and support revenue, but again, that actually went down month or quarter over quarter. So jumping again into the most recent quarter, we see that subscription revenue jumped up about $400 million in the most recent quarter. And if we take a look here, it is very consistent. It looked like it's jumped up about, call it $800 to $900 million over the last 6 months. So it's very consistently jumping up. It appears at about that $400 million per quarter clip. Now, product revenue is trending down, and so is service revenue, and that is also staying true for the 6-month trend, but it's so minor compared compared to the billions of dollars that they're earning from the subscription revenue, that it's not really a concern. As we see here, we've got about $900 million. That's about $900 million worth of revenue gains over the 6-month period. And then here we've got about $400 million. So it's very consistent. It's not necessarily lumpy like maybe Amazon earnings in the fourth quarter or some other, some other companies that you might experience out there that have lumpy revenue. This company reminds me a lot of Microsoft in terms of how their revenue structure looks and how it performs quarter over quarter. Now, more impressive than that, let's take a look at the cost of revenue. $317 million to make $2.8 billion in revenue. If you hear water falling on the ground, that's the sound of drool dripping out of my mouth, because this is, these margins are so explosive, you can't even fathom that. Product revenue, the margins are similar, and service and support it's not a loss leader, but they don't make, and compared to these margins, it's not nearly as impressive. Let's take a look for the 6th month. We spent $672 to make $5.7 billion. Oh my goodness, those are sensational margins. Just absolutely sensational. Let's just jump down to the total cost. We spent $867 million to make $6.2 billion. Okay, so there's a reason why this stock is doing this, guys, because this is just absolutely sensational. And if you own Adobe shares and you saw this from the beginning, pat yourself on the back and hope you can repeat that, because this is absolutely phenomenal. Off $6.2 billion in gross revenue, we churned out $5.3 billion. Guys, I'm not trying to pump and dump Adobe here. I am generally impressed, sincerely impressed with this type of gross margin, this type of performance from a company this old. Okay, I've been using Adobe products for as long as I can remember using a computer. This is absolutely phenomenal. Reminds me so much of Microsoft. It's unfathomable. Okay, now, as we know, gross profit's not the full story. We do have other operating expenses, and this is where a lot of companies fail to generate a profit. We have R&D, sales and marketing, general and administrative. Let's roll through it. Okay, we had $5.3 billion in gross revenue off $6.2 billion in revenue. Oh my goodness. Again, that is sensational margins. But look, hey, look. Total operating expenses, $3.4 billion. That means in the last 6 months, they've generated $1.9 billion in operating income. And notice how steady it is. So here's our 3-month column right here. We notice right here, operating income, $1 billion. So it looks like this company is making between $900 million and $1 billion in operating income per quarter. So annualize that out, you've got about $4 billion. Now I'll let you decide. A company that's generating $4 billion in operating income, is it worth $200 billion market cap? I don't know. I think this company is probably priced a little bit more rich than a Microsoft, but it may not be growing these revenues quite as fast. I'll let you decide and let you research that on your own. We got net income down here. This company is clearing most of this operating income into the bottom line. In fact, they actually picked up a little bit of gain here. And so we got $1.9 billion in operating income, $2 billion in net income. My goodness, that is absolutely sensational. I'm telling you, I can't tell you how impressive that is. So this company is clearing about $1 billion every quarter again. And from a revenue perspective, you're looking at $6 billion. So you're looking at maybe, we'll call it $12 to $15 billion for the year. Again, is that worth $200 billion market cap? I think it's a little bit stretch. I think if you bought it back down in this 250 range, you're taking quite a bit off this market cap. That makes it, to me, far more reasonable, and you're actually getting value here. I think you're paying full price at this time for this Adobe, because again, Adobe's not necessarily it's not like necessarily like Amazon or maybe like a Tesla that can come out with a new car. Adobe software and their revenue, while it is growing and it's steadily growing, I don't see that like exponential growth that you might see from an Amazon or a Tesla, like I mentioned. So current assets, how's this company doing? They've got lots of cash. When you're clearing $1 billion and $2 billion every 6 months to the bottom line, cash is going to increase. Short-term equivalents, everything's looking fine to me. Total current assets ticked up just a little bit. This is a weird view. It's weird. They're giving us from November to May. I guess that might be a 6-month view. Total assets ticked up a little bit. Let's take a look at the liability side. Let's see if they've got any messiness here. Doesn't look like it to me. They have very little liability in compared to assets, and a lot of these assets are pretty clean, except this goodwill's $10 billion. I wouldn't necessarily value that at a full price. But we've got a little bit of debt here. Notice that they had some debt here. And so what I see here is they had debt here and then it went away here. But I think what they did is they either refinanced this or it just rolled back into long-term debt because they had about 900 million. And if you add this 3149, you get close to this number. So to me, that on paper, that's kind of looks what happened. But $4 billion worth of debt, very, very manageable, especially because I can assume that Adobe's borrowing this money at probably less than you're even mortgaging your house. So it's a very, very, very low interest rate. In fact, it's and some people would even call that free money. Now, from a cash flow perspective, this company is churning out the cash flow. They've got a little bit of stock-based compensation, but when you look at the net income number, it is almost identical to the cash flow that they're generating. This is a super, super clean company. If you're new to reading financial documents, I encourage you to go through Adobe's numbers, go through like Microsoft numbers. They are super clean. You know, it's almost like, a baseball player learning how to hit. Okay, you're going to hit off a tee first. Before you jump into these more complex companies with lots of different stuff going on, learn how to hit off a tee first. If you can learn how to read Adobe's financial documents, learn how to read Microsoft documents, everything else is going to just fall into place. Now, they have this kind of... They have these non-GAAP results, but look how close these are. GAAP operating income and non-GAAP, these are so close. I would, in all honesty, I would just pay attention to the GAAP number, which again, like I said, is at running at about $1 billion, over $1 billion in profit per quarter, and it is gone for at least the last 6 months, and I think it's been actually longer than that. So back to the stock chart. What am I going to do with Adobe? It's been on my watch list for the longest time. I've been meaning to try to get into this stock forever, and stupidly didn't get into it down here. Now, am I going to come in here and buy at $439? Absolutely not. Like I said, we've got a lot of headwinds in the market. I'd wait to see where this pulls back. The unfortunate thing on this chart is this chart has gone parabolic near almost. And so it's hard to see where if this stock starts pulling back a little bit, where it's going to stop. I mean, I guess it could stop at this 380 mark, but it was such a brief period that it ticked up to here and the stock fell apart completely over the next couple months. So actually a little bit longer than that. It took a while for the stock to kind of fall apart from this is, about a month or two. So it did fall apart very quickly. And it was all mainly related to broader market sell-off. Now we could get one of those again. And, if we get one of those again, you might have your chance at Adobe. But what would I do with this stock? I wouldn't do anything more than open up a 10% position at this. So that means if I wanted, say, 10 shares, I'd get 1 share. If I was going to get 1 share and I could buy fractional shares, I'd put about $40 into this one. Now, again, that's not saying that this isn't a great company. I just went over the earnings, but the fact that it's trading at a 52-week high just makes it a lot harder to jump in with a lot of confidence and aggression. So put this one on your watch list, see what happens. The only thing missing from this company, I will tell you, they don't pay a dividend. And so if I was comparing Adobe to Microsoft, I think I'd rather have Microsoft because Microsoft's at a little bit better valuation and they actually pay a dividend. So I get a little bit of money while I kind of wait for shares to kind of do their things. I think Adobe should implement a dividend. I see a company that is generating tons of cash here. They can, institute a very, very small, not a significant dividend, but one that could help hold the stock at these levels if this stock and the broader market kind of sells off. We'll see what happens. I would keep this one on your watch list. I think it's fully valued at this point. We'll see if it pulls back and gets you a little bit more reasonable valuation. I think this PE into the 30s, comparable to Microsoft, might be a much, much better buy. I think at this point, we're stretching the valuation, even though the financials are spectacular. Leave me a comment. Thank you, everybody, for leaving comments on my video. Leave me a comment. You might agree, you might disagree. If you've got a stock you'd like me to cover, leave that comment below. I'll be glad to get to it as soon as I possibly can. Hit that subscribe button if you like what we're doing, and maybe hit that like button as well. Thanks for watching. We'll be back again very quickly with another video. Good luck with your investments.